Markets will keep going up and down, so the trick is to pick the right time to buy or sell.
We think there's going to be lots of volatility in the markets due to politics and economics and really some of these issues with weather and grain crops. And so because of that volatility, farmers need to be focused on margin and rewarding the market when it comes around.
Some producers stay away from hedging in the futures market because they see it as rigid.
I think a lot of the misconceptions that the markets are controlled. We don't see the markets as being controlled. We still believe they're viable, they reflect opportunities. We do, however, see the markets as having a bigger influence in terms of speculators than they had before. If you look at percentages of speculative trade, we now know that about 80% of the agricultural markets in the United States are done from a non-human basis. By that I'm saying a computer machine is making the buy-sell decision. That gives us more volatility and more ups and downs that seems unnatural to the U.S. cattleman.
Basse predicts continuing volatility into 2019, waiting on favorable export news to fuel a bullish cattle market.
At least as of today, there's not a demand driver for agriculture that's going to leap us into new opportunities going forward. In other words, a bull market. As we see it, there could be regional bull markets due to weather dislocations or something like that. But overall for beef, we're going to have these walls of cattle that come and go, which provide a wide swinging market over the next 9 months. In a general sense, we're hopeful that sooner or later the Trump administration will get a trade deal with China. When that happens, then maybe we can get a demand bull market.
Without that positive news on the world trade front, the key to profits next spring begins with knowing the price that's required to make a profit.
If you can figure out what your profitability is and where your margins are, there's going to be opportunities to make money. So you got to take advantage of those when they happen. Our big concern in the cattle market is really going to be the periods of April through June of next year when cash cattle could maybe get down below $1 a hundredweight. So if you see rallies heading into the winter due to either political or weather aberrations, take advantage of them. Make sure you get your hedges in place.
While a trade deal with China would add bullish stability, cattlemen must navigate near-term volatility in the meantime. I'm Bob Cervera.